From New York, Ms. Ocasio-Cortez is recognized for 5 minutes.
Thank you, Chairwoman, and thank you for holding this extremely important hearing. Thank you all to all of our witnesses here today. It's so important that we talk about some of these issues. So, folks consistently bring up this term stock buyback, but a lot of folks don't really understand what this really means. So let's break it down. Ms. Slavkin-Corzo, let's say I'm the CEO of a major corporation. Let's say I'm the CEO of a big pharmaceutical company or a big retailer like Toys R Us or Sears, and a company that's big enough and developed to the point where it can be traded on the stock market. So you can buy and sell shares of Toys R Us or Merck or what have you. So my first question is it common for CEOs to have their pay tied to stock price?
Absolutely, and as Mr. Clifford was just explaining...
Microphone, please.
I'm sorry, thank you. Absolutely, and as Mr. Clifford was just explaining, that's typical, and when you buy, this is typical supply and demand, right? When you buy stock, the supply goes down, the price goes up, and then a lot of the metrics that go into the calculation help increase the pay.
So it's exceedingly common for CEOs of these major corporations to have their pay tied to the stock price. So great. So I'm the CEO. My compensation package is based on the performance of the stock price. And I think it's fair to say that that means I'm incentivized to make that stock price as high as possible, right? If I want a huge payday, I need to make sure that this stock price on the Dow Jones, on the NASDAQ, is as sky high as possible. And to clarify, stock price doesn't always immediately or directly correlate to the actual value of the product that I'm selling, correct? So it's not as though, my product is getting more valuable if the stock price increases, right?
Right.
Okay, good to know. And it generally can create a situation where it prioritizes the interests of the shareholders more than the actual consumers of the product or even the employees of the company?
Absolutely.
All right, so let's say I'm, again, the CEO. I'm ruthlessly incentivized to make sure that we get this stock price as high as possible. And usually that means just increasing profit for shareholders. So I need to find a way to build this margin. So let's say I take away health care from my workers, right? I can make a huge killing making sure that we don't pay for anybody's health care. Let's take their insurance away. Or let's just say, hypothetically, I get a slew of hired gun lobbyists to buy up members of Congress to secure the largest tax cut in the history of the United States. So I get a big chunk from that. So now, okay, I've got that money. Am I allowed, a lot of folks, my dad, in real life, let me take my CEO hat off, but in real life, my dad ran a small business. And whenever we had a good year in the small business, we tried to pay our secretaries more, or we tried to invest more in things for the business. But as a CEO of a major company, I can take that money, and I don't have to do that at all, right? I can actually have the company buy its own stock on the market, right?
Yeah.
So let's say if I'm a big pharma CEO, I can go take this money, take people's health care away, take that margin, and buy my own stock on the NASDAQ. And that would effectively increase the stock price, right?
Yeah.
And I've done nothing to change my company, right? I've done nothing to make my product more valuable, my employees more happy. I haven't invested in the training or the workforce to make the company inherently more valuable, but I've inflated the stock price, right?
Absolutely right.
So my question is, how is this different from a pyramid scheme?
No, that's a very good question. It's a concern that I think a lot of people talk about when we talk about financialization, right? This is the concept that we're seeing so much in our economy when there's a lot of effort going into driving up stock prices, driving up the value of financial assets that does nothing for the real economy.
And I think that has an additional expense, because when you look at, for example, the GOP tax scam, about 60% of all of those proceeds went to stock buybacks. And now today we're being told that GDP is at an all-time high, but GDP tends to be indicators of company and corporate value. Is that correct?
Yeah.
So it's possible that our GDP numbers are going up without any actual value added to our economy. Is that correct?
That's correct.
All right, well, that's concerning. Well, Dr. Disney, just one last